Here are the reasons why I think a recession is coming. Now I've got my flashcard here, it's all written down. Look. Here we are, at number 1 we have money supply. Now money supply is basically just a little rough gauge of how much money is in the economy, how much money they've printed off, how much money is in circulation, you know, it's just a rough estimate. And it shows a chart of obviously increasing amounts of money in the economy. But recent times, we know that the Fed, Jerome Powell, has been printing massively, hasn't he? And it's all going a bit bizarre, to be honest. The chart does not look very healthy at all. Of course, this is only going to lead to more and more inflation as there's more and more money in the economy. Number 2, that does lead us on to inflation. Now, as we all know, inflation's massive right now, isn't it? It's at 7%, you know. I think the Fed target is at 2.5%, so they've clearly messed up somewhere because that ain't right. 7%. And all they keep blaming it on is the coronavirus. I'm fed up with this, yeah? It's not because of that. They keep saying the coronavirus strains, you know, supply chain shortages, you know, all the chip shortages, you know, what's happening with China. No, it's the amount of money you printed, you plonkers. Yeah? Why did you print so much? I get it, you wanted unemployment rate down. There's no need to carry on those stimulus checks. And if you are going to print that much, you have to raise interest rates quicker. We haven't even seen an interest rate hike. You know, UK have started raising interest in December. They've already had 2 rate hikes. Sorry, I didn't need to swear, but 2 rate hikes already. And US haven't done any. And they're the ones with the highest inflation, so it ain't looking great. Number 3, we do have the money supply outgrowing the GDP, which obviously leads to inflation. You know, when we have the money supply really skyrocketing, and that's not reflected in the GDP, then that's some worrying stuff, to be honest with you. And the money supply is just absolutely going off on one. You know, it looks like a flipping ski slope, to be honest. And the GDP, it's just not reflecting the amount of money that should be in the economy, which is worrying. The next thing is weaker company earnings. Now, of course, we all know 2021 was an economic boom. Yeah, companies just had the best earnings possible. You know, everyone was flooding all their money. There was so much spending going on. Great earnings for companies. We saw 2021 from the economic recession in the coronavirus pandemic, obviously. Massive boom. Yeah, companies, boom, 20-30% growth. Now, of course, it's not going to be the same in a normal year, is it? Normal outcome, it doesn't happen 20% growth. So it's only going to be a 10% growth. And that's going to affect the company's earnings because obviously a lot of people are expecting higher growth. That's why they've got into it. That's why the prices are so high at the minute. Next we have money velocity. Now, if you don't know what money velocity is just how fast money switches hands. Say if I buy parsnips for five quid, there you are, £5. And now the company is £5. Then say if they pay their employee £5 for the work they've done. So that's gone from me to the company to the employee, that 5 quid. So that £5 now represents £10, doesn't it? Because that 5 quid is paid £5 to the company, then that £5 is paid to the employee. So that £5 has now generated £10. So what we call money velocity is how quick it changes hands. You know, when you've got super hyperinflation going about, people want to get rid of their money. If you know that 10 quid is only going to be worth £7.80 tomorrow, you're only going to get rid of it quick, and that all leads to inflation because it just means more spending, quick buying. So that's very worrying. However, money velocity is down a considerable amount. So a lot of people, I think the Fed, you know, everyone's saying, well, if money velocity is down, there can't be that high inflation. But obviously, that isn't the case today, is it? The reason why, if I buy five parsnips, yeah, for a tenner this year, then next year I sell those parsnips and I sell 3 of them for a tenner, then money velocity is going to be the exact same. But yet inflation, the price of the parsnips has gone up massively, so I've only sold 3 and last year I bought 5. So this is why money velocity I don't think actually represents a good enough situation for inflation. Because a lot of people say, you know, well, we need money velocity to be going up before we see high inflation. But high inflation right now and money velocity is skyrocketing low. In fact, money velocity is the lowest it's been since the Great Depression times. So it's just, there's a lot of warnings there. Next up, we have interest rates. And as I've said earlier, the Fed ain't doing nothing. Jerome Powell, like, are you blind? Get your finger out your arse and fucking start raising the interest rates, you know? These people are just stupid. Why do they run the Fed? I think Jerome Powell needs to raise the interest rates immediately. You know, he's often said about March, and now with the Russian-Ukraine situation, you know, I think it will only be 25 base point rate hike. But yeah, if you really want to tackle inflation, we've got to raise the interest rates quick, you know. They've been the same since 2020 March, you know, so it's looking very worrying. Sell-offs are happening already, you know, we see it in stocks, you know, we see sell-offs happening in smaller cap stocks, in riskier assets, you know, we see it happening. Although the S&P 500 is down 11% this year already from the start of 2022. And there's the warning signs are there, people. You know, don't be blind, don't cover your eyes up and think it's all okay. The warning signs are there for a recession, and we need to get prepared. China economic slowdown also adds to the supply chain shortages. Now, I know Jerome Powell is saying that the main cause of inflation is because of these shortages and the coronavirus pandemic, but I don't think that's the main cause of inflation. I think it's a contributing factor, don't get me wrong, but it's not the main cause, you know. He's not going to come out and say, oh yeah, guess what, the main cause of inflation was because I decided to print off too much money. You know, he's not going to say that. He wants to cover his eyes and cover himself over and say that it wasn't his fault. Just keep pushing it aside and saying it's the pandemic, you know, rather than his printing, because he's printing a ridiculous amount. We've never seen this before. So yeah, China, obviously, as we know, the Evergrande crisis, they've had a bit of a housing shortage, a slow economic turn, and yeah, it's not looking great for China in terms of, you know, because they're quite big trades. You know, they do disperse a lot of products over to the West, so yeah. And next up, we do have the Ukraine-Russia situation. Now, this is just all going to add more inflation. It's just going to add to the risks. It's just going to, well, as tensions carry on, you know, as World War III becomes more and more imminent, and as we start all getting drafted up there, it's not looking great, is it? I'm going to be starting a new series, saving, basically, for a recession. I'm going to be selling 5 items. No, I've already spotted a few. We can get rid of that, to be fair. We can get rid of some stuff over there. So yeah, I'm going to be selling 5 items every single week. So anyway, I've given you 9 solid reasons why I think a recession is coming. We are due one as well. You know, as we start raising interest rates, you know, companies are going to be struggling. What can you do now? Well, in terms of your portfolio, what do you want to do with it? Well, I think gold is a very good alternative. I would say just majorly go cash, yeah. Interest and bonds, you know. I think maybe even staking USD coin on like some crypto. You know, get some high interest back on your dollars there. You could maybe do some trades on oil. You could do some trades on and you could still consistently invest in the S&P 500. That is what I'm doing, but I'm just doing it a lot less. You know, say if I was doing $100 every week before, I'd only be doing, say, $40 now. You know, just because I think the warning signs are there. Yeah, they're all my reasons for a recession. Get saving right now, because you're not going to have the chance to do it. Well, when we're in recession, you know, there is no access to money. There is no getting work. You're struggling. And when the stocks are low, you can have more cash built up, ready. So get ready for it. Of course, I could be completely wrong, you know, which is why I still consistently invest in the S&P 500. Because if that carries on going up and I've stopped buying it because I think a recession's coming and I was wrong, then, you know, I'll be very disappointed. So always consistently invest in the S&P 500, but just maybe make slight changes to your portfolio if you think something is going to happen. Like, for instance, I think a recession is coming, and I think stocks will be a lot cheaper than what they are right now. So that is what I'm playing out for. Well, anyway, with all that being said, I hope you did enjoy. As I said, the new series will be coming out, so do subscribe if you want to watch that. Leave a like if you enjoyed it, and yeah, I'll see you in the next one, people.